Ladies and gentlemen, welcome. My name is Alex Dworkin, and I'm a managing partner at 4D Capital. Today we're going to be looking at Google, but before we do, let me give you a very quick introduction about what we do, who we are, and what kind of analysis you should expect from us. So we specialize in a very unique mathematical approach to the stock market, where we calculate the market and individual stocks in multidimensional space. And when we do, essentially perfect order emerges. On top of that, we've developed a number of very powerful timing indicators over the years. And when we combine both of them together, we can very often tell what the overall stock market or individual stocks will do in both price and time. And we can typically do it on multiple time frames, whether we're talking about long-term or short-term, doesn't really matter. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. So our goal as a firm is to essentially identify stocks that will 2x, 5x, 10x within a relatively short period of time. So we're looking for the next NVIDIA, Apple, Bitcoin, Tesla, and so forth. And the way we do it is we've developed a very powerful software on top of our mathematical work that is essentially able to analyze the entire stock market, for example, scan the entire S&P 500, calculate everything in three-dimensional space, and identify what stocks have very clear upcoming turning points, particularly bottoms. We're interested in bottoms because, those stocks can appreciate 2x, 5x, as I've mentioned before, and so forth. Short opportunities are unable to do that most of the time. Well, 100% is the maximum that they can do if you're not using options. So then subsequently, our software is able, and this is the key here, it is able to identify from that bottom what that stock is going to do going forward in both price and time. And that is one of the reasons we're able to only concentrate on best opportunities, because we know when the bottom is arriving and we know what that stock is going to do going forward. So we have a webinar. We do them typically once a week. We have another one coming up this Friday. It's limited sitting. I think it's only limited to 10 people. I do encourage you to sign up. Link in the description, the video, and you're going to be able to see exactly what I'm talking about. You're going to be able to see our math. You're going to be able to see our software. You're going to be able to see how we calculate those opportunities in real time, and then hopefully benefit from them going forward. So that's it for my introduction. Let's go ahead and jump into Google. Let me just very quickly start with the fact that Google is one of those stocks that is presently, and this is very important to mention, presently doesn't have a very good time and price structure associated with it, because as we analyze stocks, they typically change. So sometimes it's very clear, and at other times it's not clear at all, or it's a bit messy. And that is the situation currently with Google. So I'll give you my best interpretation of what's going on and what Google is going to do going forward, but just bear in mind that it's probably not as accurate as we would like it to be. So the triangles, so this is for the people who are not familiar with our work. For the triangles you see at the top and the bottom of the chart is what we call cycle clusters. This is a very simplistic representation of very complex mathematical concepts, because what we do is we scan the chart in three-dimensional space and we analyze various cyclical composites. We identify the ones that work, and we project them into the future. Okay? Now, what makes matters even more complicated, there are typically multiple composites running for any given market or stock. So I use Dow Jones as an example always. And on the Dow Jones, we have two bottom composites running and two top composites running. And obviously, the bottom composites are responsible for putting in bottoms, and top composites are responsible for putting in tops. So believe it or not, in this particular example, Google doesn't have that much of a good cyclical structure, where our software wasn't able to identify long-term cycles. Even though it should be there, and I was actually quite surprised by myself, and I had to go in and check it by hand. But sure enough, Google doesn't have a very clear cyclical structure associated with it that would allow us to calculate it in three-dimensional space and then project those cycle clusters into the future. So this is what we came up with. This is short-term oriented, so it's not as concrete as we would like it to be, but nevertheless, I think it's fairly accurate. So what it's saying, and it lines up with our overall stock market forecast. So what it's saying is we should anticipate a top relatively soon. It is pointing towards the end of the year. It's going to be a major cycle top, and then from that major cycle top, the stock is going to decrease into this mid-cycle, major cycle bottom, which is scheduled for fourth quarter of 2026. So overall, this lines up with our overall stock market forecast, and that's essentially why I believe Google is gonna more or less follow the overall stock market, as will many other stocks. The lines you see on the chart is, we call them cycle clusters. And once again, very simplistic representation of very complex mathematical concept. Once again, we scan the market back in multidimensional space. We identify powerful proprietary cycles this time, and then project them into the future. And what we found over the years is that typically important turning points happen not when any given cycle arrives in time, but when there's a multitude of cycles arriving on a single date, for example. So I use 2009 bottom as an example always, because at that time, I think March 6th plus or minus one trading day, we had 15 very powerful cycles arriving on the same date. So if you're following that and you know the market is crashing into that particular date, you know that there's going to be a very significant bottom at that juncture, and that's of course what happened. So in this particular case, it is also not as clear what the timing is going to be of this particular top, but nevertheless, rest assured that it's moving into the top. It's just the underlying mathematical structure of the stock at this time is not as clear as we would like it to be. But the question becomes, where is it going to top, and what is going to happen afterwards? So in that regard, we perhaps have a much clearer answer for you. So this is yet another three-dimensional representation of our calculations. I know it doesn't make any sense to you, but it makes a lot of sense to us. And what it's saying is that Google is going to reach this particular level before it tops. And as you can see, this particular level is sitting at approximately, let's say, $290 plus or minus $5. Okay, so that's where we anticipate Google to top, and once that top occurs, it's going to decline into the second quarter, not the second quarter, the fourth quarter of 2026, according to our timing work, which is not as accurate as I would like it to be. But after that, it's going to decline into that fourth quarter of 2026, and according to our early calculations, it's going to decline into approximately $200 a share, perhaps a little bit more. We can come to a much better projection once the top is in and confirmed. We can give you a much better answer. But for the time being, it's going to decline into that $200 range approximately. But that's the best thing about what we do. Typically, we can give a much better answer. But once again, here I'm a little bit not as exact for the reasons of Google not yielding or not giving us an exact forecast. So that's the biggest problem, as opposed to me trying to hide data at this juncture. So, but the best thing about our work and our software, when we're able to do, not only are we able to project the top, but we are able to project from that top exactly what that stock is going to do going forward in both time and price. So that's it pretty much for Google. Once again, not our greatest work, but it's not necessarily our fault. Once again, the stock itself is not being very clear at this juncture. It's not providing us with a clear mathematical backbone that we can analyze, and hence the results. But overall, I think that's a pretty accurate forecast. We're going to top here. We're going to decline into the fourth quarter of 2026, where the bear market bottom is going to be, and then from that juncture, the stock's going to rebound quite strongly. So that's the overall forecast. Now, we have a 30-day free trial associated with our work. No strings attached, no credit cards, none of that stuff. We have a treasure trove of information available. Not only do we follow 52 mega cap stocks, the overall market, we have super equities, we have fast movers, we have so much information, very powerful. Anyone can benefit. So if you would be interested in requesting a free trial, the link at the bottom of this video, just send us a quick message and we'll set you up. I already mentioned the webinar that's coming up on Friday. Please join us there as well. And that's pretty much it. We'll be back with another update. Tomorrow we'll be looking at one more of our 52 mega cap stocks. So Google was one of them, and we're going to be looking at another one. I forgot what it. I believe it's Exxon Mobil, but don't quote me on that. And that's going to be tomorrow. So thank you very much for your time, and have a wonderful day ahead. Bye bye.